Imagine you're a single mother. You work 2 jobs. You make $22,000 a year. You file your taxes honestly, every single dollar accounted for. And then one day, a letter arrives from the IRS. You're being audited. Now imagine your neighbor. He runs a hedge fund. He made $4 million last year. He has 3 accountants and 2 tax lawyers, and he's never once been audited in his life. Here's the question nobody in Washington wants to answer. Why is the IRS 5 times more likely to audit you than him? The answer is one of the most disturbing financial scandals in American history. It's not a conspiracy theory. It's not a political opinion. It's documented, verified, government-confirmed fact. And today, we're exposing all of it.
First, let's understand the basics. Every year, Americans file tax returns. The IRS, the Internal Revenue Service, is the government agency responsible for collecting taxes and making sure people pay what they owe. Now, in theory, the system is simple. You earn money, you pay your share, everyone contributes to roads, schools, hospitals. Fair enough. But here's where it gets dark. The IRS doesn't have unlimited resources. It can't audit every single return, so it has to choose who to audit. And the way it makes that choice is where everything goes wrong. See, the IRS uses a secret computer algorithm, a system nobody outside the IRS fully understands, a system that decides, based on what's in your tax return, whether you get flagged for an audit. And that algorithm has been quietly, systematically targeting the poorest Americans for decades. Not the richest, not the most powerful, the poorest.
In 2022, the US government passed something called the Inflation Reduction Act. Inside that bill was a promise, a specific, direct promise to the American people. The IRS would receive $80 billion in new funding, and that money, they swore, would only be used to go after wealthy tax cheats, people making over $400,000 a year, big corporations, complex partnerships, billionaires hiding money offshore. The Treasury Secretary herself said on the record, "We will not increase audit rates on households earning under $400,000. Sounds fair, right? Here's the problem. An independent government watchdog called TIGTA investigated whether the IRS was actually following through on that promise. And what they found was shocking. The IRS had no plan, no methodology, no timetable, no milestones. In fact, between the years 2019 and 2023, more than 90% of all IRS audits were focused on people earning under $400,000. 90%. And buried inside that number, an estimated 600,000 new audits on Americans earning less than $75,000 a year. People who are barely getting by. People who can't afford a tax lawyer. People who don't even know they have the right to fight back. The promise was broken before the ink was even dry.
Now, to understand the deepest layer of this scam, we need to talk about something called the Earned Income Tax Credit, or EITC. The EITC is a tax benefit designed specifically to help low-income working Americans. If you earn under a certain amount and have children, the government gives you a tax credit, sometimes worth $2,500 or more. 26 million households claim it every year. It was designed to help the working poor, single parents, minimum wage workers, people holding it together by a thread. Now here's the cruel twist. The IRS's secret algorithm specifically targets returns that claim the EITC for audit, not returns from millionaires with offshore accounts, not returns from corporations with 47 pages of tax deductions, returns from people claiming a $2,500 credit because they work at Walmart and have 2 kids. According to CBS News analysis, the IRS audits poor Americans at 5 times the rate of everyone else, and the data gets worse. 50% of all IRS audits involve people who claim the EITC. The very benefit designed to help poor people has been turned into a targeting system against them. Why? Because auditing a poor person is cheap. It costs the IRS just $29 to audit an EITC return. Auditing a complex business return for a wealthy person costs $385 or more. So the IRS, starved of resources, pressured to show results, takes the easy route. Target the poor. It's cheaper, it's easier, and it makes the numbers look good.
For years, tax reform advocates suspected something was wrong, but nobody could prove it. Until 2023. A team of researchers from Stanford University, the University of Chicago, and the University of Michigan published a bombshell study. They analyzed millions of tax returns. They cross-referenced audit data. And what they found was so disturbing that the IRS commissioner himself called it deeply concerning. The study found that despite the IRS using a so-called race-blind algorithm, an algorithm that supposedly doesn't consider anyone's race, Black Americans were being audited at 2.9 to 4.7 times the rate of non-Black taxpayers, nearly 5 times more likely to receive an audit letter. Not because they were cheating more. The study found no evidence that Black taxpayers underreport their taxes at higher rates. Not because their returns were more suspicious, but because the algorithm, while technically race-blind, was designed in a way that disproportionately flagged the types of returns that Black Americans are more likely to file. Specifically, returns claiming the Earned Income Tax Credit. The math is brutal. Black households make up just 21% of all EITC claims, but they account for 43% of all EITC audits. Let that number sink in. 21% of the claims, 43% of the audits. The IRS didn't deny it. They confirmed it. The algorithm, built with your tax dollars, was producing racially biased results, and it had been doing so for years.
Now here's the part of this story that should make your blood run cold. Because getting audited isn't just stressful. For poor Americans, an IRS audit can be financially devastating. Here's why. When the IRS audits a wealthy person, that person hires a team of tax lawyers. They respond to every letter. They provide every document. They negotiate. They fight back. When the IRS audits a poor person, often that letter just goes unanswered. Not because the person is guilty, but because they don't understand they're being audited. Because the letter is written in complex legal language. Because in 15% of cases, the letter can't even be delivered. The person has moved, has no permanent address, or has no reliable way to receive mail. And here's what happens when you don't respond to an IRS audit. You automatically lose. The IRS closes your case as a change, meaning they assume you owe more money. They add penalties. They add interest, and they can garnish your wages, seize your bank account, or put a lien on your property. For a person making $20,000 a year, a surprise $1,500 tax bill with penalties can mean the difference between paying rent and living in a car. The data confirms this. Among the poorest taxpayers, those earning under $10,000, 64% of IRS audit notices received no response at all. 64%. These aren't criminals. These are people who didn't understand they were being audited, people who couldn't afford a lawyer, people the system left behind. And the IRS counts those non-responses as successful audits, because on paper, they recovered money. It doesn't matter that the taxpayer may have been completely innocent. The number looks good, the quota is met.
And make no mistake, this machine is running at full speed.
In fiscal year 2024, the IRS collected $76.6 billion in unpaid taxes. That's a 13.6% increase from the year before, a record number. And a significant portion of that money came not from billionaires, not from corporations hiding profits offshore, but from ordinary working Americans, caught in an audit they didn't understand, unable to fight back, and forced to pay up. More than 5.3 million delinquent accounts were processed in a single year. The IRS can file tax liens against your property. It can seize your wages directly from your employer without a court order. It can drain your bank account. And the burden of proof? In many cases, it falls on you to prove you're innocent, not on the IRS to prove you're guilty. You are assumed guilty until you prove yourself innocent. In America, in the land of the free. If you steal $500 from a convenience store, you have the right to a trial. You are presumed innocent. But if the IRS says you owe $500, you have to prove otherwise or pay up. Think about that. So what can you do? Here's the truth, and I want to be direct with you. The system is not fair, but knowing how it works is your first line of defense. Number 1. If you claim the Earned Income Tax Credit, keep every document, every receipt, every pay stub, every record of who lives in your home, because if that audit letter comes, you need to be ready. Number 2, if you receive an IRS letter, respond, even if you don't understand it completely. Even a simple response saying, "I received this and I'm reviewing it," buys you time. Non-response is an automatic loss. Number 3, free help exists. The IRS has a program called the Volunteer Income Tax Assistance Program, VITA. It provides free tax help to people earning under $67,000. Free, trained volunteers, real help. Use it. Number 4, know your rights. You have the right to appeal an audit decision. You have the right to request more time. You have the right to have a representative speak on your behalf. Most people who get audited don't know this. The system counts on that. The IRS targeting poor Americans is not a glitch. It isn't an accident. It is the predictable result of a system that is cheaper, easier, and more profitable to go after people with nothing to fight back with. A Stanford study proved it. The IRS confirmed it. Congress was told about it, and the machine kept running. Knowledge is the only armor you have. Share this video with someone who needs to see it. Hit that like button if this opened your eyes. Subscribe to Dark Real History because next week we're going even deeper. Drop a comment below. Did you know about this? I'll see you in the next one.